Welcome back, investors, to Ticker Time News. I'm Adam, and today we need to talk about something serious: GameStop. There's a battle happening right now in front of us. There's an epic David and Goliath story unfolding right before our eyes against institutional investors and retail investors. And it has nothing to do with GameStop, the company. GameStop has become the front line of this epic David and Goliath story. So today, Robinhood blocked their users from being able to purchase any GameStop stock, along with AMC, Naked Brands, several other companies that are rolled up into this. Retail investors on Robinhood's platform were not allowed to purchase the stocks because Robinhood basically came out and said, but we know better than you. We don't want you to lose your money on making a bad trade. So we're not going to let you buy these stocks for your protection. Okay, real quick update on what's happening. So we have GameStop, which is a company that's been around for a long time. It was popular when I was a kid. You go there, rent video games. So it's a brick-and-mortar video game retail in the U.S. It's been on its death door for a while. Right now, it's got a market cap of $13 billion. That's not how big this company actually is. Just look, 52-week difference, $2.57 is its low, $483 is its high. That's not normal for this company. This company's been in a decline for a while. So, authorities are going to examine the role Reddit and the subgroup called Wall Street Bets had in GameStop shares surging. The White House says they're monitoring this. Brokerage accounts like Robinhood stopped buyers or stopped their users from buying certain shares, including GameStop, but still allowed them to, guess what? Sell. We're going to get into that in just a moment. That's why I have the stock chart pulled up here. So, shorting a stock, okay? Because GameStop has had poor performance over the past decade, along with growing digitalization of video games. Huge institutional hedge funds have been shorting the shares of companies like GameStop. Short selling, to make a long story short, is essentially betting that a specific stock will fall in value in a short period of time. Think of it like this. There's a stock out there that's worth $5. I borrow that stock from somebody. I sell it to somebody else for $5. Then, in a short period of time, the stock price drops to $1. I then go back to the person that I borrowed that share from and say, here's your dollar. I made $4. We're shorting that stock. The person who lent me that share, they just lost $4. So who's losing this $4? Is it Wall Street or is it Main Street? Is it retail investors or institutional investors? For years, institutional investors have been making billions off of small retail investors, everyone's 401k. And right now, retail investors have gotten together and said, enough. You game the system on us. We're going to game the system on you. A company called Marvin Capital Management. They shorted GameStop for billions. They had to close out their position in GameStop on Tuesday, January 26th. And they took those losses with them. Now, it doesn't say how much they've lost, but it does say that they've had to borrow $3 billion from two different investment banks so their company can stay afloat. So a Wall Street company can stay afloat. Remember when we bailed out the banks? Didn't bail out Main Street. Okay, so let's look at this. This is the price chart for GameStop today. All right, this is today. Let's say, for example, because remember, Robinhood did not allow anyone on their platform to buy any GameStop stock today. Okay, so there was price movement on here. Somebody was buying. Look right here. So the stock closed at, say, about $340 a share yesterday. All right. It opens up. You're an average retail investor. You hear about what's happening. You want to get involved. You go and you buy a share, $340. The company's not worth that. But you want to get in on this massive David and Goliath fight. So you buy your share at $340. You check it the next morning, the stock opens up at $262. You get a little nervous. Should I sell? But then immediately you watch as the stock price goes up and hits $483, an all-time high. And you're thinking, awesome, I'm helping, I bought shares, I've just made some money, everything's looking okay now. But then you go in, you want to buy some more, you open up your app on your phone to Robinhood and you can't buy any. Well, then at 10 o'clock, right at 10 o'clock, 10 a.m. in the morning, the share price starts to fall. And it starts to fall. And then the share price gets down to where you bought it at about $340. And you're thinking, oh, what should I do? Well, Robinhood has blocked GameStop from showing up on their app unless you own GameStop. If you didn't own any and you go to search for it, you get an error. So this person who bought that share for $340 now sees the price dropping, falling all the way down to $112. Why did it fall so fast and so far? Why did it fall from $483 to $112 in 60 minutes? Because Robinhood allowed you to sell. They didn't allow you to buy. They didn't allow new people who didn't own the stock to even look up the stock. All they did was allow you to sell your stock because that's what they wanted you to do. That's what the hedge funds wanted you to do. They wanted you to sell your stock so the price would go down. So now they're not losing those big billions anymore, but they're still losing. They've still lost. And then what happens when the price gets down to $112 down here? At just after 11 a.m., the price goes right back up to over $300 again. Was that retail investors buying the stock up to cause the price to go up? In less than an hour, from $112 to over $300? No, that wasn't retail investors buying. That was institutional investors, hedge funds. That was Wall Street buying to try to cover some of their losses. Because retail investors, we weren't allowed to buy. So what's a very popular strategy in investing on a company that has good fundamentals and the earnings reports are outstanding and stellar, just like Microsoft had, and and Apple had this past week. Buy the dip. What happened right here? Goodness gracious, this is a V-shaped dip right here. Somebody sold off quick and bought back quick. These were retail investors selling because they didn't want to lose money. And that was their only option because Robinhood stopped them from being able to do anything else. They could have held it, but they didn't want to lose money. Most retail investors don't have a lot of money to invest. Certainly not the millions and billions like hedge funds do. So this is institutionals buying back in, causing the price to go up to cover their losses. So let's jump through some news here real quick and we'll wrap this up. So Reuters is reporting that losses on short positions in the U.S. top $70 billion. That's right, $70 billion. So just real quick, short sellers are sitting on an estimated loss of $70.87 billion from their short positions in U.S. companies so far this year. Now, this is data from analytics firm Ortex. The hefty losses came as shares of highly shorted GameStop jumped more than 1,000% in the past week without a clear business reason, forcing short sellers to buy back into the stock to cover potential losses, defined as a short squeeze, while retail investors then piled on to benefit from the surge. The data showed that as of Wednesday, there were loss-making short positions on more than 5,000 U.S. companies. Its data also showed that estimated losses from shorting GameStop at $1.03 billion year to date. Today, breaking. Class action complaint against Robinhood filed in the Southern District of New York. That's right. Robinhood saying, we know better than you poor little retail investors. We know how to protect your money. No, you don't. We can do it ourselves. Robinhood, aren't you the platform that started to democratize investing? Robinhood, from all the pressure, from all the negativity, says they will allow limited. Now, what does that mean? What does limited mean? Here's the email Robinhood sent out to its members this afternoon. And it says, a note on market conditions. We wanted to reach out to you in the midst of the current volatile market conditions. It's as important as ever to be an informed investor. Whether you're brand new to Robinhood or have been investing with us for years, we have lots of resources to help you navigate the markets, including Investing 101 and our entire Help Center. Here are some specific articles from Robinhood Learn to help make sense of market volatility. The stock market has been super volatile. How can I make sense of it? Volatility explained. As always, thank you for being a Robinhood customer. Sincerely, the Robinhood team. Really, Robinhood? You think that little of us? You think retail investors can't make up their own minds on what stocks to buy and what stocks to stay away from? Why do you think you're watching this YouTube video right now? Because you are an informed investor. You're informed because you do the research, you do your due diligence. You watch videos on earnings reports. You get other people's perspective and ideas. Hey, we're not all right. But right now, retail investors are under attack from institutional investors, from some Congress people in our own government, those on Wall Street who think they know better than us, the elites who think they know better than us, the people. I hope you found some value in this video. I'm sorry it was a bit of a emotional one. I definitely don't do videos like this typically. But let me know in the comments section, how's your trading as a retail investor? Are you doing all right? Thank you for watching. Make sure to like, subscribe, and please share this video. I hope it can answer questions for others. As a retail investor myself, I'm hoping to help other retail investors like you. I'll see you in the next video.